All right, good morning, good afternoon, whenever you guys and gals find this video. This is the update on the sterling yen trade that we've been tracking for a couple of days now, a few days. And the TRN target has finally been hit. So our target has been hit. Now, I would have argued yesterday we came pretty damn close to it, and truth be told, I would have said, yeah, well, come on, we kind of hit it, and we're gonna, now we'll figure out whether or not this upward momentum, this upward bullish tone to sterling yen will continue for a longer period of time. But hitting it is a really good thing, because hitting it and going up above it is really showing that there is still a bullish inclination for the market, and you just don't want to get in here. You need to figure out where you'd want to buy it, and at what point, you'd say, well, uncle, something's wrong. So, but I'm going to go over a couple of points. The first point I'm going to go over is right now, I'm going to show you I have trend degree levels right above here. They came in based off of the analysis of the wave that we've had here, and they're saying there's going to be some supply, invisible supply, so to speak, because on the 4-hour chart it doesn't really exist at all. Okay, actually, if I go back, let's see something here. You're going to start seeing there's a trend degree that's up here as well, 137.47, and there is some supply up here, or what I would call resistance, because this is basically where the last buyer had bought before it fell. So those are the 2 points I want you to be aware of. You're going to have some resistance there, which is good if you want to get in. You don't want to buy up there. You're waiting to see what happens after we bounce off of this. How far down do we come? Now, yesterday I didn't do the update, my girl's birthday, so I was kind of busy, doing stuff with her. And in all reality, I thought her birthday was today, so it took me kind of like by surprise. I know the date, but I thought yesterday was the 20th and not the 21st, and I thought today was going to be the 21st. So I was, in a little bit of a pickle and up the gum tree, and I'm just lucky she doesn't watch these videos. She finds them completely boring, and so I could be completely candid here that it was taken by surprise, and I had to act like, oh yeah, of course, yeah, well I was gonna do this with you and do that, so. So I ended up doing some things on the island. Although the weather's not great, it's still a little fun place. I mean, there's a lot of nature here. You see a lot of deer, you see bear, it's pretty cool. But anyway, I got off track. So yesterday, what I did was I looked at the price that we reached at 136.43. Okay, and I said, wow. I said, that's darn close to the Trend Reactionary Number. And I did say in the previous video that I thought that we were going to get more of a pullback, and I thought the pullback was going to happen right around this 135.70 trend degree level. Okay, that was calculated off of the wave down in here. Okay, and it didn't really. It kind of used it. At first it did do this. It came down 135.40. But really, I was really expecting, remember we said in the other video, I was expecting like 135.05. I really was expecting this movement down here to gain strength and push us up. And I'm not saying that it can't do that. I'm just saying right now it hasn't done it. So I showed you guys in a previous video how to calculate 15 degrees off of a supply point. That's what we started, and also off of a demand point. You could do it either way. So if you take this top of 136.43, okay, and then you do what I asked you to do in the other video, and actually go back and look at it. You take the square root of it, and then you subtract a factor from that square root, and then you re-square the number. You're going to come up with a trend degree right here, 15 degrees off of the high price of at 135.34, 135.35, 135.34, 135.33, and you can see the marketplace just kind of skid through the line, okay, to 135.27, and then it's done this and attacked this. So that's a great history lesson. So what are we looking for now? Well, we're looking for resistance again up here. If you have not gotten long, this has not become an easy trade. Okay, so now it's a question of like, okay, so why do I want to bother with this? Because I kind of missed a decent move up of 200 and some odd points already. Do I really want to get involved in this? That's the question you have to ask yourself. You know, if you look at your analysis, do you continue? Do you think that it's going, you know, much higher? Is it going to 145? I have to say probably it's going into the 140s. Yeah. So, but the question is, where do you get involved? Well, there's going to be a lot of different places to get involved. Okay, and some more opportune than others. And this is the things that you need to learn so you can plan for and develop your trading plan. So this is the whole idea of these like videos, right? To show you that you can learn technique and make it fit your personality, because everybody is different. Everybody has a different appetite for risk. And you can make these things your own by not changing the science behind the techniques, but by tweaking the entries and things that make it more suitable for your personality. The only way that you're ever going to make money trading in anything, commodities, money, stocks, is to learn technique, make it your own. You know, if you think that you're going to be able to make money following some guy giving out signals, or following, you know, the latest guru out there that, you know, knocked it out of the park, you know, you're not going to be able to do it. You know, and there's one major reason you're not going to be able to do it. It's because you don't believe in it. You haven't made it your own. So therefore, there's going to be a part of you that always fights what's going on. Like, say for instance, the guy's giving out a signal, and you missed 3 signals that were right, and the net total would have been 130 pips, 140 pips. The next one you take, it goes wrong, and he loses 60 pips. And you go, oh, damn. Okay, I'll take the next one. Next one he takes goes wrong, and he loses 30 pips. The next one you're going to be suspect about, and you're not going to take. And that could be the one that goes up 80 pips. Then you say, damn, every time I get in, it doesn't work. But because you really don't believe in what the guy's doing, because maybe you don't even know what the guy is doing. Or the girl, or whoever it is, or the robot, or whatever that thing is, or the fake algorithm that they come up with. But again, I digress. I go into another point. The point that I'm trying to make is that you need to learn this stuff and make it your own. Okay, then you'll be able to be successful trading whatever you want to trade, because you have something that you studied, that you tested, that you know that, okay, it's going to go down through periods of drawdown, and it's the only way that I'm going to be able to stick with it is if I stick with it through the periods of drawdown. You cannot optimize. You cannot optimize in trading. Nobody or no system is right 100% of the time. Nothing ever is, because we're dealing with human psychology here. We're dealing with, these are people in the market. And you need to ram that home. It's like you're never going to come up with something that is 100% correct. You can come up with something that's 60% correct. That's fabulous. You know, I'm telling you that I've come up with ways that are almost 70% correct. And you know what? I sometimes don't believe it, even because I came up with it. Sometimes I don't take trades. I say, oh, no, you know, who are you to come up with something like that? Well, let me tell you something. These trend degrees are incredibly accurate. incredibly accurate. And I came up with those. I came up with trend reactionary numbers, incredibly accurate. And sometimes I fight with myself, you know, because I'm a human being and I'm subject to my own emotions as well. So a little bit of a psychology lesson there for you, extra for the amount of money that you paid, which is nothing, and that's the way I like it. A little bit of free advice. All right, so I took the high here, and I took 15 degrees off of it, and I came to this price point here. Market came down through it. It skid a little bit through it, and then it rebounded and it touched the TRN. So what's next? Well, okay, so you can do the same exact thing now. Now we have a point that we can look at. We could go down to this low. When's the last time I traded a higher? It's right here. We could do Fibonacci ratios for, you know, upward, right, to see where support could be. Or we could do, really what you're supposed to do is go from this high. It hasn't completed yet. You should wait till it completes the 4-hour bar. You can actually go back in time and try to find the last time it was higher, which was here. And then you're going for the lowest point in the whole thing, which is down here. And you're running, let me just crunch the chart up a little bit so you can see. You're running from that high that's in to this low. Now, again, in all actuality, you really need 8 hours because you need this to close, and then you need this to be your pivot point. Okay, so you need another bar, 2 bars after it to confirm that this is your pivot. Then you can run prices. And basically what the rules are in the skinny of this whole thing of 12 minutes that we've been going is that this 135 is an important level. I would really like to see it come down in here. I like to even see the old 134.81 get tested before we march higher. Because what that will do is it will create a condition known as what I call the market paradox. And what the market paradox states is that markets are driven lower in order to flush out the weak hands and give better buying opportunities to the strong hands of the marketplace. So in other words, the market's driven down in order to fool the uneducated trader into believing that he's wrong or she's wrong, only so that they can get those positions back, because who's selling back to them are the uneducated or the neophyte trader. And look, it happens in every business. Okay, people in the know are trying to take advantage of people that aren't in the know. And I would say not in every business, because a business really should be one where you're actually helping your customer. You're offering things so that your customer has a better, the customer's paying for something, you should be giving something of value that's worth more than the money that he gave you. But in trading, it's a zero-sum game. So we basically, what we're giving the neophyte in value is knowledge, because the neophyte either has to wake up or he has to leave the marketplace, and then another neophyte will take his place. But unfortunately, it's a zero-sum game that we're playing. So I would look for a nice pullback. I don't know if we're going to get it, but you could run your Fibonacci levels. I'd like to see that. If you guys could do that for me and throw some pictures up in the comment section, that would be nice. That would really be nice. So I'll leave you guys here for now. I'm going to look at another cross currency. Probably going to look at maybe Swiss yen, because I've had some interest in people asking me about Swiss yen. So we can do Swiss yen, little analysis. Another thing I'm going to be introducing you to in a future video. Actually, you know what? I'm going to leave that as a secret. I'm going to be doing Swiss yen, and maybe I should introduce it on Swiss yen. Yeah, I'll introduce it on Swiss yen. And basically what it is, it's an idea that you can actually spy in on the international banks and figure out really where their orders lie. And it's a simple technique. It's nothing, and it's in all reality, It's not guaranteed, but it's something, another tool that we can put in the toolkit so that you guys and gals can have some more insight into what the market is whispering in our ear every day. All right, so I look forward to talking to you guys soon. You have a wonderful day, and remember this: enjoy the party, dance near the door. Cheers.